Good morning, traders, and welcome to the channel. Today is Monday, April 7th, and downward it is. We've gone down now over 17% on the S&P 500. The Dow, the Nasdaq, they have dropped 2,000 points since, and start of this morning, Asia is plummeting as well. Nikkei, Hang Seng, Australia, they are all down from 4 to 6 to even 10%. So hold on to your hats. The market correction is going to continue. If you can consider this any more correction as we are entering the bear market. The S&P 500 has really now fallen 17%, and probably after today we will see something like 25 from its peak since November 24. And I believe it's quite likely that the decline will continue. Even the Guggenheim investment has provided a clear summary of a duration of bull and bear markets, S&P 500 index movements since 1968. I'm referring here that the bear markets have lasted on average 19 months. And as we're entering the bear market now, so you have to keep this in mind. The average peak to through decline of 41%. And currently we have fallen about 20, 17, 20. And it's been 4 months since the peaks on all the markets. So even in the shortest cases, reaching the bottom in a bear market has taken 9 months. So something we should all keep in mind. Where we are now on DAX, S&P 500, Nasdaq, everything, where the market can correct from here with if this administration does not back up on the global trade war they have initiated one-sidedly. And what's interesting on the US federal government side is currently the federal government is borrowing 51 cents for every dollar they spend. So in February alone, 86 billion just went to interest on the debt. That's 63% on all personal income taxes collected on February in US. So imagine the situation where the country is. So to me, it kind of seems that what the administration is trying to do is save or make a political career, or to save the country from this debt, to make this YOLO move to get countries and companies to invest in a week to build a factory and commit bringing the manufacturing into US and start shoveling money into the country. Whereas, like, does that happen in this time frame what they're hoping? But this kind of seems that this is their like only move what they're after, because they're so deep in this debt situation. Yeah, the level of spending is really unsustainable at the point and puts everybody, themselves, us, and future generations. But that's for the market sentiment, what's going on in Asia, what's about to happen when the markets open. So it's highly likely that the correction will continue. Be aware that Asia is down now 4 to 10% all the way from Australian stock market. The oscillators are heavily pointing downwards. If you don't remember, 2 weeks ago we were watching these double tops. You can see the earlier video here as we were thinking if this will still continue upwards, depending on what's about to happen. But then came Liberation Day and everything we've spoken about today. And DAX has since plummeted from these highs of 22,061 to now what we went and touched the 19,443. So really put your technicals into the drawers and follow the macroeconomic news, because the administration is really running the markets now, whatever they decide. But the worrying part here altogether is that when you do something like this and the countries retaliate with their or protect their trade, it's, even though US would back up or start having second thoughts on what they've just done. So these are so drastic move for the other countries' manufacturing and trade planning. So you're kind of pulling everyone to these erratic and sudden movements, whereas we've done 85, 95 years of solid, healthy bilateral trading agreements and free trade agreements, and now the world seems to have changed. And even though USA would be playing some game that they would decide otherwise what they've just notified us, like other countries cannot do that. So we're all in this together and we're going down. Start of a new week, be very careful out there. I'm not looking to be in the markets today, probably not this week at all. If you just heard what I said in the morning about the Guggenheim investment average on how when the bear market initiates and how we are moving into the bear territory on shortest time frame, they have lasted since 1968. They have lasted for 9 months, and we're just in it for 2 weeks now. So there's really no bottom in sight yet. So do something with your time and money, and possibly do not trade today. It's going to be a very steep decline. It's always a good indicator what's happening in Asia, and especially in these times and conditions. 15 minutes and 5 minutes looks like this. So this must have been the Asian Open. Let's see. Yeah, 1 o'clock in the morning here in Europe, this has happened. So when the futures market has kicked in, we dropped suddenly from 20,299 to 19,440. So a quick 500 from there when the future markets are open. Since they have recovered from that. But have you seen anything like this on when Asia has opened and the markets are closed in Europe? No, you have not, and I have not either. This is this is quite scary. I'm not interested on this. Sitting on my hands and doing something totally else with my time. This is going to be a short one. Just why don't you recap what I just said in the beginning about the bear market and how long they've lasted on average. So if you think this is somehow different, you're correct, because this is a whole lot different. This is a man-made disaster. This is no global pandemic. This is no World War II going on. This is just one world view of how things should be done, and the market has reacted according. And that's something that us retail traders should not be now taking part. Be careful out there. It's Monday, 7th of April. I will be here every day. Let's analyze the market together. Leave me a comment, hit the like button. Let's notify other traders to stay away from the markets right now and stop losing money. And I'll see you tomorrow.